Welcome to Furniture Industry News. Today is November 24th, 2025. On today's show, we're tracking consumer spending trends ahead of the holidays, digging into a major bankruptcy announcement that's shaking the industry, checking in on the global freight markets, and looking ahead at the rise of a new kind of AI in retail. First up, let's talk about the cautious consumer. To understand where our industry is heading, we have to look at the broader retail environment. And right now, the picture is mixed. According to recent reports from Circana, U.S. retail sales revenue did see a small 2% growth in early November, which sounds like good news. However, when you look closer, unit demand remained flat. This tells us that while consumers are resilient, they are also facing serious headwinds. In short, they are spending more to get less. This is especially true when it comes to discretionary spending. General merchandise sales actually declined 1% in dollars and a more significant 4% in units compared to this time last year. And if you compare the numbers to 2 years ago, the trend is even starker. Sales are down 10% in dollars and 9% in units. This sets a very cautious tone as we head into the crucial holiday shopping season. A recent Deloitte survey confirms this mood. It shows that average spending during the Black Friday to Cyber Monday period is expected to be around $622. That's down 4% from last year. The reason for this pullback is simple. The higher cost of living and ongoing financial constraints are forcing families to make tough choices. Interestingly, there's a generational divide in these spending plans. Gen X and baby boomers are the ones planning to significantly reduce their spending, while Gen Z and millennials are reporting that they'll hold steady. But across all age groups, one thing is crystal clear. Shoppers are extremely deal-focused. Many have said they plan to only purchase items that are at least 50% off, so the pressure on retailers for deep discounts is immense. So, how is this general consumer caution affecting the furniture market specifically? Unsurprisingly, the softness in the broader market is being felt in our industry. Let's use accent furniture as an example. This is a big category, covering everything from accent chairs and tables to bookcases and cabinets. Sales for this category saw a small decrease of 0.6% in 2025, dropping to about $21.46 billion. Now, what's interesting is how those sales are distributed. Traditional furniture stores saw their sales in this category decline by an estimated 1.8%. Meanwhile, the e-commerce channel actually grew slightly by 1.3%, showing the continued shift in how consumers are buying. Despite the slight dip in accent furniture, it's worth noting that the overall home accents category, which is a bit broader, is estimated to see a small rise of 1.2% this year. It's a sign of a market that's treading water, not sinking, but certainly not booming either. Now for our biggest story of the day. American Signature Incorporated, the parent company of both American Signature Furniture and Value City Furniture, has filed for Chapter 11 bankruptcy protection. This is a major development for one of the country's largest furniture retailers. The filing reveals some challenging numbers. The company reported assets between $100 million and $500 million, but its liabilities are estimated to be between $500 million and $1 billion. To manage this process, the company has secured $50 million in new financing to support its operations while it seeks a sale of the business. In a statement, the company pointed to the ongoing macroeconomic headwinds and a significant decline in sales as the primary reasons for the filing. Of course, there is a human impact to this news. WARN notices have been issued, and significant layoffs are scheduled for January 2026 at their main office in Columbus, Ohio. This move follows a series of store closures over the past year, including locations in Michigan and Nashville, Tennessee, as the company attempted to realign its market presence. To put this in perspective, American Signature was ranked number 15 in the top 100 furniture retailers, with over $1 billion in sales in 2024. The court filings also show that the top 30 unsecured creditors, many of them suppliers in our industry, are owed a combined total of over $80 million. We will be tracking this story closely as it develops. Shifting gears from domestic retail to the global supply chain, let's take a look at the freight markets. This week, global container freight pricing has held flat, but that stability hides some powerful competing forces. What we're seeing is that weakening demand on the Trans-Pacific routes is being offset by continued strength on the Asia-Europe routes. Let's break that down. Spot rates from Shanghai to New York fell 10%, and rates to Los Angeles slipped 7%. This isn't surprising, as most retailers have already completed their holiday season importing, and we're now in a seasonal lull for that lane. It's a completely different story on the Asia-Europe lanes. Rates there have increased for the sixth consecutive week. Rates from Shanghai to Genoa, Italy rose 6%, and to Rotterdam they climbed 8%. Carriers are actively trying to firm up this pricing as they head into the new annual contract negotiation cycle. The market remains volatile, with ongoing tariff risks and potential changes to Suez Canal transits creating continued uncertainty for the months ahead. Finally, let's look to the future. If you thought generative AI was changing the game, get ready for the next evolution: agentic AI. While generative AI is great at analyzing data and creating content, agentic AI takes the next step by automatically taking action based on that data. In simple terms, think of an agentic AI solution that not only analyzes inventory and competitor pricing, but then automatically adjusts prices in real time based on local store factors. Or a customer service chatbot that doesn't just answer a question but is empowered to automatically issue a customer a refund, no human intervention required. This is becoming incredibly important, fast. Some big retailers are now reporting that 30% or more of their online traffic is coming from AI platforms. This means retailers need to start treating their product information and data on these platforms with the same seriousness they give to a traditional SEO strategy. If your products aren't visible and accurately represented to these AI agents, you risk falling behind. We are just seeing the beginning of this transformation, but it has the potential to completely change the landscape of online commerce. And that's a wrap on the big stories shaping our industry this week. For the latest updates, be sure to subscribe to our podcast.